Interest rates just doubled? Should you switch to a fixed rate mortgage right now? I'm gonna give you the answer on this week's episode of Prime Properties TV. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Properties TV. So glad you could join me here today. In a surprisingly not so surprising way, the Bank of Canada effectively just doubled their overnight lending rate yesterday by increasing their rate from 0.5% to 1%. Wowza. This means that everyone's variable mortgage will go up by 0.5% in the following few days or weeks whenever the banks trickle that in. Now, I've talked about this a lot before, like a lot. Not every big bank will actually change your monthly payment except for the big one being Scotia. And most of these big banks are actually going to keep your monthly payment that you're paying right now the same. However, the interest portion and the principal portion that you pay does change, meaning interest rates go up, you pay more interest, less principal. And if you want a deeper understanding of how all this works, you can check out this video up here. Now, the purpose of this video is what's on everybody's mind. Because the rate hike is so high at 0.5%, should you switch to a fixed right now? Plus, I also talk about how the interest rate hikes will make the market prices go down a little bit later in the video. But everyone's talking about, should I fix it right now? But on the variable versus fixed debate, because the rate did go up 0.5%, and I've said this many times before, the big banks make more money off of you when you go on a fixed rate, mainly because to break that mortgage, you break it by paying something called the IRD, which is the interest rate differential. And that is a silly amount. Averages around like 3% of the remaining mortgage. So it's a lot of money, meaning that most of any savings you would have had if the fixed rate was actually lower than the variable gets totally wiped out on the penalty. However, even with the overnight rate going up 0.5%, the variable right now is still lower than the fixed rate. So if your bank is calling you right now saying, hey, Mr. and Mrs. Homeowner, you can switch to a fixed rate with no penalties. Yeah, that's just a sales pitch. Don't do it. Yeah. Understand what I'm about to tell you in this video first, okay? The 0.5% increase in overnight rate will increase the prime rate at the banks from 2.7 to 3.2 for most banks. TD, I'm looking at you. The last end user mortgage discount I saw was prime minus 0.6%, which meant that the contract variable rate is at 2.1% right now. A 5-year fixed right now is starting at 3.79, meaning that there's still a 1.69% spread between a variable and a fixed. Again, it's still very much a game of chicken with the Bank of Canada right now. And even though I'll likely be wrong about my 3 rate hikes adding up to 0.75% for the year, it still makes more sense for you to take your chances with a variable. And I still think that there's likely going to be a rate hike that's coming in the summer if inflation continues going at this rapid pace. It's really high right now, 5% in Canada, 8.5% in the US. And this date could be the June or July date that'll bring the total rate increase over 1%, meaning the overnight rate will be over 1% officially, which will officially also make me wrong, but I'll admit it regardless. But despite that, I'm still betting on variable, like I said earlier, because it's going to beat out the fixed just based on numbers I showed you earlier, right? Now, I'm still of the belief right now that I think something is going to break in the economy before we see the Bank of Canada's overnight rate over 2. Now, if you don't remember, pre-pandemic, meaning before March 2020, we were just around 1.75. So for us to get from where we are right now, 1% to 1.75, I still think it's going to be really tough given that the amount of money was, helicopter dropped into the economy since the pandemic is absolutely high. Now, can it happen? Of course. Yeah, of course it absolutely can happen. Do I think the chances of that happening are greater than the rates dropping when this thing is going to break the economy? Yeah. What this thing is, I'll talk about it later, but if you're my client, you probably hear me talk about it. But it's really just got risk analysis from my side, despite what someone may tell you. And, no one has an idea of what those risks are. But these increased rates have to hold for a long, very prolonged time in the real estate market for it to actually move the prices significantly. Real estate prices tend to be very sticky, right? Because sellers are stubborn. If you ever worked with one, you'll know. Just because the interest rates dropped yesterday doesn't mean my sellers right now are going to take less money. See what I mean? The interest rates are more or less irrelevant to them because they just want that price and they're stubborn about it. However, over time, when other people around the same area sell for less, they're going to have to accept the reality of what their price is worth, or so what their house is worth, because what a house is worth is what someone's willing to pay for it. But currently, day one, after a 50 basis point hike or 0.5% increase, prices ain't moving, man. They're just not. Now, this is the type of real estate content you enjoy. Help us spread the knowledge by smashing that like button and subscribing to the Prime Prop CEO channel, because every week we make awesome content like this to help you understand what the hell is happening in the real estate market. And all of this is so that we can be transparent and honest with you, so that when you're ready to make a move, whether it's buying a real estate, selling real estate, or investing in real estate, you'll be like, Zen and his team, they know what they're talking about, so that you'll book a call with me to strategize what that move is going to be. And you can do that using the link right here. It's www.chatwithzen.com. Now, what I think is going to cause the price drop eventually is not so much the interest rate, but what the interest rate caused, which is buyer sentiment. I've also talked a lot about this in the past few months. And if you are the type of buyer that just needs a house with certain features, such as 4 bedrooms, a powder room so that you're not running up and down on the main floor, then you aren't overly concerned about pricing as much, because it's going to be your forever home for as long as forever is, because everyone always wants to move in their big house. But it's more about what's your family needing, and it's driven by that, by a need, not a want. Also, most of these buyers aren't as sensitive to interest rate changes. However, there is a larger subset of buyers who will be concerned about the interest rate change that just happened yesterday and their monthly carrying costs. The would-be buyers and sellers out there that were trying to be opportunistic. And this interest rate will probably move them out of the market. And like I was saying earlier, the new contract rate at the new variable doesn't go past the stress test posted rate. Meaning this, the buying power doesn't change. But if you were a buyer who is concerned about the monthly amount, then what you are comfortable with does change. Very, very distinct difference. It's not what you can afford, because what you can afford is about the same. But what you pay and are comfortable with has changed. Very, very specific. In case you didn't understand that, here's a chart of me kind of taking you through a buyer's thinking, and I'll walk you through this. So let's assume the buyer understands variable versus fixed and goes variable because, still the better option. And pre-doubling of the interest rate, your average, Greater Toronto area home is around $1.3 million, a little bit lower than that, but whatever, right? So with the pre-doubling of the rate, your rate was 2.1% on variable over 30 years, and that's going to cost you $3,900 a month. With the new interest rate at 2.6%, because it went up 0.5, your monthly mortgage payment now increases into the 4,000s, or increases by $270, give or take, which is equivalent to a 7% increase in the monthly payment, give or take. Again, not a huge amount per se, but those who are kind of on the edge, on the cusp, will kind of start feeling it and becomes uncomfortable for them. Especially if all of us are anticipating another rate hike in the summer, or at least I am. So if that buyer wants to keep their monthly payment same as what it was before the interest rate hike, they have to work back the numbers and realize to keep the monthly payment around $3,900, give or take, their new budget is now $1.2 million instead of 1.3. So this is the downward pressure that buyers will first start to kind of mull over, which takes time to trickle into the market. Then all of this takes time to trickle into the sellers and for them to actually accept that they aren't going to get a price that they saw in February that their neighbors sold for. See what I mean? So this is normally how it starts, and it takes time. This isn't saying that all of a sudden the average price will drop from 1.2 to $1.2 million because the monthly carrying cost changes, but that's the buyer sentiment that needs to start trickling into the market first. And if the sentiment with the buyers remains weak for a prolonged time, prices will fall. Let's hope me explaining my kind of thought process makes sense to you right now. Now, my last point for you is this. If you're looking to be opportunistic, this isn't the time, right? unless you can really find a seller who's freaking out about 50 basis point increase. But I don't think there's that many out there. It's very much still a seller's market. And I'm not one of those realtors telling you right now, buy right now to be opportunistic or, buy the dip. It's not that time right now. I'll let you know when it is if you're my client. But there hasn't been enough time for the interest rates to trickle into the market to actually find a good deal. You know what I mean? Or like find a desperate seller. You may catch one if they need to buy, if they bought already, but they're far and in between now because they happened last month. So you see, you need the seller's sentiment to change from the buyer sentiment. And we're still, months away from that. However, what this interest rate does is remove a lot of investors or buyers out of the picture and competition, as the cost to borrow from yourself, usually via a home equity line of credit or HELOC as most people call it, also increases with this rate hike. It becomes a double whammy on one side, on the borrowing and on the buying side. So what I will say is this: it's still very much a wait and see kind of timing of the market. And if you want to be opportunistic, just be patient. And if you're kind of making a move personally, then I would say most of this is kind of irrelevant to you. And what I mean by that is this: like, here's an example. Anyone who's moving to a bigger house and wants to time it to the kids' school year and not going to let their plans change because of this, because they still want to enjoy summer and they don't want the kids to change school in between school years. So this is why everyone's situation is different. And I keep repeating myself over and over again, but you have to know your motivation and apply the macro picture to your micro picture properly, because everyone's situation is different. There is no blanket statement for everyone's circumstances in this shifting market because it's very different for each person. Now, just to give you some anecdotal evidence from last week, I've been part of 5 properties last week that had 5+ offers on them. Plus, I've also seen homes in the exact same area that are also getting 0 offers. You see what I mean? There's a big dichotomy between the two. So it really depends on what you are doing in the real estate market. And if you're looking for some good, solid advice on whether you should buy, sell, or invest right now, you could book a call with me specifically using the link right here. It's www.chavzan.com. Hopefully this gives you a little bit of clarity on what's going on. The world's not falling. We're just in a transitional period right now. And yes, interest rates did go up. And yes, we should expect another one in the summertime. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.